Minasan, konnichiwa, Zamurai Engineer desu. In this chapter, we are discussing Chapter 2, Systems Design, Job Order Costing. We are in Module 3 currently. Our goal for this video is to be able to compute predetermined overhead rates and explain why estimated overhead costs are used in the costing process rather than the actual. So we are just going to use the estimate. So application of manufacturing overhead. The predetermined overhead rate, POHR, predetermined overhead rate, used to apply overhead to job is determined before the period, beforehand. So in planning stage, so we have to estimate. POHR or predetermined overhead rate is equal to estimated total manufacturing overhead cost for the coming period over estimated total units in the allocation base for the coming period, so that we can get the rate or per unit. Okay? So ideally, the allocation base is a cost driver that causes overhead. So we already have some familiarity of what are the cost drivers. Okay? There are examples that we already explained. However, as we go along, we will have other explanation and other examples. So don't worry right now. Application of manufacturing overhead, continue. Using a predetermined overhead rate makes it possible to estimate total job costs sooner. So we can plan ahead. Actual overhead for the period is not known until sometime after the period has ended. Actual overhead cost can fluctuate seasonally, thus misleading decision makers. It simplifies record keeping. So although there is a risk of misleading information, and the decision makers could go wrong because of this misleading information, it simplifies record keeping. Because you have yet to know the number of units, the actual number of units. You don't have that data yet because you are planning for this period, this coming period. Okay, and what is the cost overhead for that period? So you are just what? Making a scientific guess, not a wild guess. A wild guess is not useful. Scientific guess is useful even though they may actually mislead the decision maker. But they are scientific in the sense that they are logical, they have basis, while they come up to that value. Okay? Different, very different from wild guess. Determining predetermined overhead rates. How to do it? Predetermined overhead rates are calculated using a three-step process. So remember this process. You just have to divide 3 by 2. So step 3 divided by step 2. Okay? So what are these? Step 1, estimate the level of production for the period. And number 2, estimate total amount of the allocation base for the period. So level of production, then you can now estimate the total amount. And then number 3, estimate total manufacturing overhead cost. And therefore, due to the formula that we know previously, we presented in this slide previously, we have what? predetermined overhead rate is equal to step 3 divided by step 2. Application of manufacturing overhead based on estimates and determined before the period begins. So overhead applied is equal to predetermined overhead rate times actual activity. Actual amount of the allocation based upon the actual level of activity. This is called a normal costing system. Applied. Okay, applied overhead. Estimate, POHR is an estimate times the actual activity. So that is what? Sense of depending upon the activity. Okay. Application of manufacturing overhead continued. POHR again is equal to estimated total manufacturing overhead cost for the coming period. For the coming period, you don't have the actual data because it is in the future. Divide by estimated total units in the allocation base for the coming period. Also for the coming period, you don't know yet how many units is going to be manufactured. Okay. So, for example, POHR is equal to 640 divided by 160 direct labor hours. Direct labor hours. So, if you divide, you have what? $4 per direct labor hour. For each direct labor hour, work on a particular job, $4 of factory overhead will be applied to that job per hour. So it is fair because a job could be specified in terms of number of hours. Okay, and then multiply that by the cost per direct labor hours. So then you have what? Overhead. That is an example. That is an example. Okay. Here, application of manufacturing overhead, we have an example previously on our what? Module 1. We have what? Direct labor and manufacturing overhead. So direct labor is 8 hours, therefore manufacturing overhead is 8 hours. Times $4, so 32 is the overhead for this what? For this job order. Okay. So we are able to complete all the 3 categories of manufacturing cost. Direct material, direct labor, and manufacturing overhead. So completing, summarizing it. So direct materials, put it on the yellow portion on the job cost sheet. So 116 plus 88 plus 32. So you have a total of 236. Okay. And because it is what? If you have two quantity, there are 2 units that is planned to be made. No? So therefore, the item there on the box item, 2 wooden cargo crates. So 2. So 236 divided 2 is 180. So that is unit product cost. Interpreting the average unit cost. The average unit cost should not be interpreted as the cost that would actually be incurred if an additional unit were produced. That is our common interpretation. Fixed overhead would not change if another unit were produced. Okay? Because it is fixed. There are fixed overhead. So if we produce more, the unit cost would decrease. Okay? Because, for example, the overhead is what? Air conditioning. If we produce more, the cost of air conditioning will become lower because that is divided into number of units of product. Okay? As you produce more products, the contribution of aircon to one single product becomes smaller. Okay? Fixed overhead would not change if another unit were produced. So the incremental cost of another unit is something less than 180. It is just specific to 2 units. So take note of interpretation. Okay, do not interpret this as the cost that would actually be incurred if an additional unit will produce. No, that is not. That is specific to the estimated number of units to be produced. That is, in this example, we thought it to be 2 units. Okay, let us check our knowledge so far by taking this question. Job WR53 at NW Publication Incorporated required $200 in direct materials, 10 direct labor hours at $15 per hour. Estimated total overhead for the year was 760 and estimated direct labor hours were 20,000. What would be recorded as the cost of job WR53? So you can say 200 of direct material. That is already the cost for direct material. And direct labors, 10 with $15 per hour, so 150. So 200 plus 150, that is what? 350. For the overhead, manufacturing cost, 760,000 for 20,000 hours. So let us divide this. That is 38,000. No, $38 per hour. Okay, $38 per hour times 10 hours because there are 10 direct labor hours. So 38, so that is 380. So 350 plus 380 is 720. 730. 350 plus 380 is 730. So therefore 730. Okay, that is the answer. Okay. So let us summarize the document flow in a job order posting system. Summary. First, a sale order is the basis of issuing production order or the job order. Then after which a production order initiates work on the job. So it will trigger this to happen. Okay? So triggering the job order operation would initiate ordering first of material to be used, maybe either direct or indirect materials. Okay? Material requisition have to be ordered. So direct materials, job cost sheet. So material requisition form, okay? MRF. No? And you have what? For indirect materials, you have manufacturing overhead account. So account name. So there are several account names, as you know in financial accounting. So if you are still unable to understand financial accounting, watch and rewatch and review and use our video lectures for financial accounting. So do it repeatedly so that you will understand and practice the recording. What are the important recording there? Journalizing, posting, and trial balance. And then after which, you can familiarize yourself with income statement, balance sheet, okay, and then cash flow. Okay, those are some of the important information you needed from financial accounting. Otherwise, you will not understand managerial accounting. Managerial accounting is higher level because it is for managers. Okay, so you have to have a basic of financial accounting, and we already reviewed that. So it depends on you. Okay, if your classmate is not reviewing or not looking back at those videos, it is not necessarily mean you don't have. Your classmate's ability is different from your ability. Okay? Do not compare yourself with your classmate. Maybe your classmate needs 2 repetition and you need 3 repetition. Okay? So rewatch and rewatch those lectures. Okay? So document flow summary continued. An employee's time may be either direct or indirect. So we are now talking of direct labor and indirect labor. Employee time ticket. So job cost sheet for the direct labor and manufacturing overhead account again for the overhead. What about the overhead? So we have what? Indirect labor, indirect material, and other actual overhead charges. So those are the content of manufacturing overhead account, and we can have what? The document, apply it to the job cost sheet that we familiarize with on the first module. Okay, so let us end our current module here and expect other modules to be similarly important as this one. This is Dr. EYPEI, Preaching Engineering for Nation Building.